Success is the child of drudgery and perseverance. It cannot be coaxed or bribed. Pay the price, and it is yours. Orison Swett Marden. Now, we're not asking you for a lot of drudgery. We are asking for perseverance. 10 to 15 minutes a day is all we're asking, but you can't coax or bribe success. You have to pay the price, and the price is your daily vigilance, doing practice trades, following these charts, being with us 10 to 15 minutes, filling out at least once a week your weekly market worksheet. Every time you do a practice trade, your trade worksheet, and keep up with this stuff. It is fun. You're supposed to be enjoying this. I think it is a blast. I love it. And as you get better and better at it, you get even more satisfaction. But it's going to take 10 to 15 minutes a day, not 2 hours once a week, 10 to 15 minutes a day. If you're not following these markets every day, you don't get a flavor for them. So do that with us. Books available, Charting Your Way to Wealth. Follow the link in the show notes. Become a Patreon supporter if you appreciate what we do for you for free every day. Let's jump into these charts. We're going to first, as we always do, go to the weekly chart. Week starts off moving up, a nice green up candle. The high so far, 332.18 on the S&P 500. 332.18 was the high last week. So we're not reaching a higher high yet. We're right where we were last week. As far as the wick on top goes, price percent oscillator still heading up. Not at the same angle it had been, and that's just the first day of the latest weekly candle. We also see the derivative oscillator losing a little bit of energy and momentum. Go to the two-day chart, and right there at the top, it's hard to see, but it has gone flat on us. What do we see here? In the first time in 5 weeks, we have a we have a red slowdown candle. That's an open box red candle forming on the two-day chart. Now, remember, the latest two-day candle ended on Friday, so this one's just representing Tuesday. So we got to have one more day of movement for a full two-day candle, but it is showing a slowdown. Now, 6 weeks ago, we saw a spinning red top, and then 9 weeks ago, 6, 7, 8 weeks ago, we saw a red spinning top. Don't know what this one's going to be. It's a short week because of the holiday, Martin Luther King Day in the States on Monday, but we do see prices still well above the two-day and the weekly derivative oscillator gaining upward momentum. Like we said, that price percent oscillator is about flat. Go to the 4-hour chart. We can see things again sliding sideways throughout the course of the day. S&P was technically down 0.20%, and we see that 4-hour chart moving down as far as the price percent oscillator goes. Hasn't crossed going down. The 4-hour chart's also losing energy on the derivative oscillator. We saw that later in the afternoon, so we'll just watch and see. Are things finally topping out, or is it just catching its breath to move up again? We do have a big green candle. All things being equal, remember, the market tends to move in the direction of the largest chart. Go to the Qs, the NASDAQ 100. Prior week, the high was 223.56, 223.84, so it is higher. Big green up candle with a wick on top. Price percent oscillators lost a little bit of that upward momentum. Derivative oscillator, however, still heading up. Go to the two-day chart. What do we see there? We can see it's weakening a little bit with a high 223.56, 223.84. So just the first day of the latest two-day candle. Again, wait for it to finish drawing before we call it, but it's looking nice and green right now. We go from the two-day to the 4-hour. And again, we see that price percent oscillator losing some of its momentum. Derivative oscillator still heading up, but that 4-hour chart up in the morning, not up as high in the afternoon. So we'll just continue to watch. See how things shake out on these charts. Again, still looking quite nice. The Qs was down for the day 0.04%, so 0.4%. So not down much. Again, starting the week off a little sluggishly as far as stocks, both the S&P and the NASDAQ 100 go. Let's go to bonds. Bonds up, booming up. Starting the week off on Tuesday, the shortened week, 1.05%. We have a big green up candle after a prior week of really some lackadaisical moves, a red spinning top, long wick on the top, short wick on the bottom. Price percent oscillators about flat. Derivative oscillators still barely negative, losing downward momentum. First day of this 4-day candle in the shortened week. Go to the 2-day chart. And of course, starting off with a boom, the high, 139.65, the prior high back on the 16th, representing the 15th and 16th Tuesday and Thursday, 139.76, 139.76. So again, a little bit higher back 5 days ago. So we'll just wait and see. Derivative oscillator gaining upward momentum, price percent oscillator heading up on the first day of this latest 2-day candle. So we'll pay attention. Now again, remember, as we look at these charts, the weekly's in a confirmed down move, 2 days in a confirmed up move. We see up movement in the morning and not as much in the afternoon. We did see things flip over in the afternoon as far as the price percent oscillator goes. Derivative oscillator still negative. So don't have a trade on bonds, just waiting to see how bonds are going to sort out. When we have the weekly going down, the 2-day going up, or vice versa, means we don't have a trade until they start moving in the same direction, either a recross on the 2-day or that weekly chart moves over into the same direction of the 2-day, which gives us a weekly vertical crossover. If the 2-day rolls over going down, then of course that gives us a 2-day recross to move in the same direction as the weekly chart. Remember, the weekly chart is what always controls. Things must be moving in that direction. It's our biggest wave. It affects the most. It's the longest lasting, and it's the one we pay the most attention to. So we're going to leave bonds now. We've already covered stocks, bonds, and we go to gold. Gold up for the day, 0.11%. We're waiting for gold to take off, and it's just stuttering on us. We had that weekly vertical crossover back on Friday, the 10th of January. This last week, a red open box showing a slowing in the price of gold. And then we see starting this week off, the high 146.86, the high last week 146.99, so not reaching a higher high yet. Red open box, not a solid red down candle, but a slowing. Again, showing us more slowing. We can also see that in the price percent oscillator. Not quite flat. Derivative oscillator gaining upward momentum. So we'll keep our eye on things there. Prices above the 2-day, but struggling to get above, it's above the weekly, struggling to get above the 2-day. We look at that 2-day chart and we can see this sideways slide. We have a red spinning top, means indecision tending down forming. Price percent oscillators pretty much flat. Derivative oscillator losing momentum. First day of the latest 2-day candle, we'll sort of see what gold sorts out on Wednesday as that candle ends, and we'll see if we have strong up movement in gold, strong down movement, or if gold just continues to putter sideways. What is gold going to do? All things being equal, markets tend to move in the direction of the largest chart. But again, that other caveat, the trend is your friend until the end. Is it ending? We don't know. We're just waiting to see how it sorts itself out. Look at the 4-hour chart. Down in the morning, recovery in the afternoon, for the day up 0.11%. 4-hour chart continues to move down now. A little bit of hope, a little bit of brightness. Price percent oscillator's gone positive. That's about the only thing we got there. Derivative oscillator's gone positive. Price percent oscillator a little less than flat. So we'll wait, see what there is to see, how gold sorts itself out. Hoping it's going to keep moving up. Maybe it's just digesting those pretty much 3 weeks, maybe 4 weeks of gain. And these last 2 weeks, maybe it's just digesting those gains and getting ready to pop up again. Don't know. We'll continue to monitor and see what happens. God bless, my friends. That's it for the program today. Again, buy the book if you're interested. Love to send you a copy. And want to be a Patreon supporter? We sure appreciate that. Great training for you today, by the way. Got a great training. We're starting the 3-part series again on options. Want you to have that. If you're still holding on, check out your show notes on options. Options Made Simple, Part 1, How Options Work. 3 parts. They'll be coming over today, and then on Wednesday afternoon and on Thursday afternoon. So stand by to receive. God bless. All the best from the whole team at Charting Wealth World Headquarters.